When you open that first door, you usually come in a bit cynical, but inquisitive.
Of course.
And then you walk into this new room and you go,
wow.
And then you think, hey, I've got it. I understand it now. And then you go, well, what's that door over there? You open it and go, oh my God, what's that? And before you know it, it's a maze, because you'll discover it's the biggest thing you've ever seen. So to explain this to people, the internet grew at 63% a year in terms of number of users from 1990 to 2000. In 1997, there were 150 million users of the internet. And as I said, it was growing at 63% a year, the fastest growth of any technology the world had ever seen. We all know that. We all talk about the internet. So here we are today in cryptocurrencies. They've also been around about 10 years. Currently, there's 150 million users, but the network is growing at 113% a year. So it's twice the speed of growth of the fastest technology the world has ever seen. We've never seen anything like this. And what this is the network of money, and it's exploding in size. It's a $2 trillion asset class currently as of today. If we look at the other major asset classes around the world, equities, bonds, real estate, they're kind of range between 150 and 350 trillion US dollars. So this digital asset, if we just follow that adoption curve that we're looking at, they will get to a $200 trillion asset class, which is, we'll have never seen this happen by 2030. We'll have never seen an asset class that didn't exist come out of nowhere and be worth $200 trillion. So to think of it, what does it mean? Why should anybody care watching this? This is an entire asset class that's going up 100-fold by the end of this decade. It's like one of the easiest ways to make money and prosper is to have a wave behind you, the wind in your sails. This is the biggest wind in your sails you'll ever have. And so many people are being cynical fighting it, when if you just turn and don't face the wind, put it in your back, you can sprint. And that's the opportunity here. Think of a comparison and think how stupid it sounds if I said to you, oh, Sydney Harbour real estate's going to go up 100x. And I could pretty much show you how and why, and it was going to happen by 2030. You just do everything you could to buy as much property as you possibly could, or build it, or start real estate agents, anything. When people tell you about cryptocurrency, people are like, well, I'm not sure about that. The government's going to ban it, or, whatever it is, because people fear change. And this is a gigantic change, but it's really exciting. What you do when you create an excess amount of something, so let's say iron ore in Australia. If you pull too much out of the ground, demand collapses. I mean, you've got too much supply, so prices fall, right? So if you create too much supply of a currency, and we see it because the banks are hoarding this stuff, the price of the currency falls. Now, we grew up in a world where the Aussie dollar goes up against the US dollar or goes down, or the euro goes up against the Aussie, right? That's the relative valuation. But Australia, New Zealand, Japan, Europe, the UK, Canada, the US, they're all printing money. So what happens is the value of all of these currencies falls together. So you're like, well, how can that work? Surely one has to go against another. No, they fall against things of scarce supply. Gold, Bitcoin, real estate, equities. Those are why these things go up so much. It's the value of the denominator goes down, the fiat currency. So if you ever look at the chart of the Venezuelan stock market, it's the best performing stock market in the world and has been forever, but it's not. That is priced in Bolivar, but the currency keeps devaluing about 70% a year. When you put it into US dollars, the stock market's gone down a lot. This is what is going on. So the central banks around the world, the G4 big central banks, are printing currency at the rate of about 15% a year. So your hurdle on your investments is now 15% a year, or you're getting poorer. i.e. you can afford less of a house or less investments every year because of this. And crypto is one of the only things that outperforms the central bank balance sheets. So I checked this and looked at real estate prices in Germany against the ECB balance sheet. Flatline. They're the same thing. Well, German real estate looks like it's going up. Swedish real estate, UK real estate, Australian real estate, Canadian real estate, US real estate, they're all the same. What they're doing is reflecting the fall in the value of the currencies created by the central banks creating too much currency.
So look at the chart, the ETH Bitcoin cross. It's forming this little wedge pattern short term. I think it's going to break that any day now. Then the next move is to 0.08. That is the big level. It's the massive kind of resistance level. And if it goes to that, that cross is going to move up at least 100% or more. So basically my view is that ETH is going to dramatically outperform Bitcoin. On price action alone, I'm very bullish. On network model, it's growing faster. More people are coming to the network faster than that happened at Bitcoin at the same stage with the same number of users. There's more development going on it, more applications going on it. It's kind of like, and they're just reducing the supply with the, EIP 1559 and then ETH 2.0. There's like only 11% of all ETH left on exchanges. There's no supply, and that's going down every day. And demand is going up exponentially. And the only way, if you've got supply that's capped and demand going up exponentially, the only thing that's going to happen is price goes up exponentially.
This is going to catch a lot of people by surprise. It is all in the run-up where the money will be made. My guess is the moment ETH 2.0 happens, half of the ETH gets unlocked. And it all comes onto the market and the price will collapse. It's typical. Yeah, and that's a short-term thing. It might be an overhang for a year. I mean, who the hell knows, right? But that's pretty obvious that this is the best single time. That's why I call it the greatest trade between now and ETH 2.0. Everybody wants it to happen. They're going to lock up as much ETH as possible and get the yield. It's as simple as that. But when it comes out, chance ETH collapses. If you remember when Coinbase went public, everyone's like, this is so good for the space. Everyone's going to know about it. What did it do? Marked the exact high in Bitcoin. And I'd mentioned that on Twitter beforehand. I'm like, this is what it's going to do. And it will. And this will probably mark the high in ETH. Right now, the marginal change is more and more people locking up ETH, right? The rate of change of people locking up is still extremely high. What will happen is the rate of change of people staking will fall. It's as simple as that. The bull case is that, of course, there's a load of people who are just going to stake and just leave it there. And that's good because that's the long-term health of the system. Nobody's in this for the quick buck, but there's a shit ton of people, yourselves included, who will end up selling some ETH because they want to buy a house or get married or do all the stuff that costs fiat money. People try to overthink everything. ETH currently is a platform. That's how I think about it. It's a platform from which to utilize their blockchain to transfer value, to store value, and to create applications on top. So, is elements of it money, as we talked about? Yes. Are elements of store of value? Yes. Are elements pure technology? Yes. I mean, it's everything. So, it kind of is still the vision that Vitalik had of the kind of internet computer. I mean, it is that, but that sounds a bit restrictive. It's kind of I call it the internet of value, and you could call it the platform of value. And it's not exclusive because others can do similar things, but nothing has the scale, the scope that Ethereum currently has. I'll approach macro, a lot of macro guys do. You've got this big thesis now, which is 100x the space in the shortest period of time. So then our job is, okay, how do I add alpha? Where do I find the better bets? Now, there will be probably 50 tokens or assets that will outperform Ethereum, but they're riskier. I don't know what they are. I have no ability to choose them. When you look at Ethereum, it has all of the elements of the lowest risk, highest quality trade. And it's a rewarding ecosystem with rewarding people in it, because there's a social element to this, there's a cultural element to this movement as well, and it's rewarding. So it's a good space to hang out where you feel comfortable with the asset, you understand how many smart people are working on it. So when you say to me, oh, there's a risk in 1559 getting done, my answer was the risk is like minuscule. And so I didn't care about it. Like ETH 2.0, it's minuscule. Why? Because there's a lot of very smart people, smarter than I'll ever be, working on it. So the probability is extremely high. And that's what makes ETH so rewarding.